Imagine walking into a funding meeting where, instead of defending crypto risk, you present MiCA compliance as your strongest selling point. In this module, we'll turn the EU rulebook into leverage for trust, EU-wide growth, and serious institutional capital. Early crypto was driven by hype, speculation, and fragmented national rules. That was fine for quick gains, but terrible for durable businesses or attracting serious capital. MiCA flips the script. It treats crypto as financial infrastructure. Clear, EU-wide rules, predictable supervision, and stronger protection for users. That shift, from chaos to coordinated standards, is what unlocks trust, scale, and true institutional participation. With serious institutions, your product isn't the hero. Their risk committee is. They care about whether client assets are protected, whether management is trustworthy, and whether your operations can survive shocks. MiCA turns these expectations into rules, and compliance turns your story into their language. MiCA's core idea is simple. If you hold the keys or move the money, you're in regulated territory. Think in 4 big buckets. Custody means safeguarding client assets and running wallets. Trading platforms match buyers and sellers. Brokerage and execution handle orders on behalf of clients. Advice and portfolio management steer their investment choices. Your brand matters less than your activities. Structure your products assuming regulators will look straight through the label. The MiCA passport is the big strategic prize. Once authorized in a single EU country, you can serve most of the EU without relicensing market by market. One major compliance investment can then unlock hundreds of millions of potential customers and a far more scalable business model. Treat MiCA-style governance as part of your product, not a legal afterthought. Your tech stack, user interface, and liquidity engine all sit on top of it. Fit and proper leadership, 4 eyes checks, and clear conflict of interest rules become comfort signals for banks, institutional clients, and serious partners. They read them as proof you can survive crises, scale responsibly, and be worth integrating with over the long term. MiCA also pushes you to choose what game you're in. A hype-first, to-the-moon brand attracts short-term speculators and constant volatility. A trust-first, institutional-grade brand attracts treasuries, corporates, and long-term savers. That audience cares about authorization, segregation of funds, and audited reserves. Under MiCA, your biggest yield isn't leverage or gimmicks, it's credibility. The regulation massively raises the fixed cost of being in the game. That hurts tiny teams, but it also creates a powerful moat for anyone who gets licensed early. Once you've paid for lawyers, systems, and governance, every new competitor faces that same 60,000 plus hurdle. So the strategic question isn't can we avoid these costs, it's how do we use them to lock in an advantage. Regulatory uncertainty acts like a tax on your valuation. Investors price in the risk that rules might shut you down or force an expensive pivot. As you move toward MiCA alignment, that regulatory risk discount shrinks, and entirely new, regulated capital pools open up. LP conversations become easier. Internal risk committees can say yes, and a credible MiCA gap analysis turns into a core data room document. Under MiCA, not all stablecoins are created equal. E-money tokens promise to mirror a single currency, like a digital euro, with one-to-one redemption and full reserves. Think of them as a regulated wallet balance on a blockchain. Asset reference tokens tie value to a basket of assets. They offer diversification, but face heavier scrutiny because failure can ripple across multiple markets and user groups. The Brussels effect means EU rules don't stay in Europe. Global players often adopt them everywhere because it's easier to run one compliant model. For crypto, MiCA can become that template. Being EU regulated turns into a quality badge that reassures banks, institutions, and regulators worldwide. Your sales team needs a simple, repeatable MiCA story. First, name your status. We're an authorized CASP, supervised by regulator. Second, explain safety. Client assets are legally segregated from our own. Third, highlight resilience. We align with DORA-level cyber and operational standards. Turn this into a standard slide and script so every institutional or B2B conversation opens here. MiCA treats market integrity as non-negotiable. Insider dealing, wash trading, and manufactured hype aren't growth tactics, they're enforcement triggers. Your real power as leadership is culture and incentives. Who gets promoted, who gets paid, and what behavior is quietly tolerated. Think of MiCA execution as a three-phase journey. First, get your bearings. Run a simple gap analysis, fix the most visible issues, and put a cross-functional team in charge. Next, design the real structure. Clarify accountable executives, governance, and your authorization plan. Finally, treat compliance as a product. Track rule changes, scale your controls with growth, and continually refine your approach. Everything in MiCA leads back to three levers you can actually manage: trust, scale, and capital. Governance and clear conduct rules turn scary crypto risk into something customers and regulators can live with. Passporting then converts that trust into EU-wide distribution. And once you look predictable at that scale, serious capital shows up. Compliance gets you in the door. Strategy decides how far you go.